Welcome to the deep dive. Today we're looking at ASML, a really key company, obviously, in the whole tech supply chain.
Absolutely central.
Yeah. And you've pulled together quite a bit for us, the Q1 2025 earnings call script, their investor slides, the press release, and a couple of Morningstar analyst reports, too.
That's right. A good stack of info.
So the plan is to sort of sift through all this, pull out the really important bits about how they're doing now, what they see coming, and, the bigger market picture.
Trying to make sense of it all without getting lost in the weeds.
Exactly. Give everyone a clear view. So where should we start? Q1 performance.
Yeah, let's dive into the Q1 numbers first.
Yeah.
I mean, the top line looks pretty strong, wouldn't you say?
Definitely. Net sales hit $7.7 billion. That actually beat their own guidance.
Right. And net income was solid too, $2.4 billion.
But the thing that really jumped out, for me at least, was the gross margin, 54.0%.
Yeah, that is high. Above their guidance range.
Significantly above. It kind of underscores their pricing power, doesn't it, when your tech is that crucial?
It does. And they actually broke down why it was higher. It wasn't just one thing.
Oh, right. What were the main drivers then?
Well, they mentioned customers hitting productivity milestones with the EUV machines they already have. Faster than expected, it seems.
Okay, so the installed base is performing well.
Exactly.
Yeah.
Plus, they had a favorable EUV product mix. Sold more of the newer 3800s than they thought they would.
The higher end stuff.
Yep. And those tools apparently had richer configurations too. So higher average selling prices, higher ASPs.
Gotcha. So better performance from existing tools, more sales of the premium new ones, and those new ones were spec'd out more. Makes sense.
It all adds up to that strong margin.
Yeah, what about the orders? Net bookings were $3.9 billion, with $1.2 billion of that for EUV.
Right.
That's quite a bit lower than the previous quarter, wasn't it? Like $7.1 billion in sales and similar bookings in Q4.
It is lower sequentially, yeah. That's a point worth digging into.
Should we be worried about that? Does it signal some kind of slowdown?
Well, ASML addressed this directly. They use the word lumpy.
The classic lumpiness of large capital equipment orders.
Exactly. These are huge, expensive systems. Orders don't just flow in smoothly quarter after quarter. They also mentioned governance steps.
Meaning the customer's internal approval processes?
Yeah, big decisions, big money, takes time, can shift timing. So they're saying that dip doesn't necessarily reflect, a fundamental demand issue.
Okay. And we should also remember the installed base management part, right? The service revenue.
Good point. That was $2 billion in Q1. That's their service and field option sales. It's a big and likely more stable chunk of revenue.
So even if system orders bounce around, that service revenue provides a nice baseline.
Definitely reassuring. Sort of the razor and blades model, but with billion-euro razors.
Yeah, something like that. And they were buying back shares too.
They were. Bought back about 4 million shares. Spend around $2.7 billion in Q1 doing it.
What's the typical read on a big buyback like that? Confidence.
Usually, yeah. Signals management thinks the stock is maybe undervalued, boosts earnings per share, generally seen as a sign of financial health and optimism about the future.
Okay. So, strong Q1 overall, despite the lumpy bookings. Let's pivot to the outlook then. What are they saying about the full year 2025?
Well, crucially, they're sticking to their full-year revenue guidance.
Yeah.
That $30 billion to $35 billion range.
So the Q1 beat and the lower bookings haven't changed their overall target for the year.
Apparently not. They seem confident they'll hit that range.
And profitability. What about gross margin for the full year?
They're guiding for 51% to 53% for the full year.
Okay, so a bit lower than the 54% they hit in Q1.
Right. And they actually gave a slightly wider range just for Q2, 50% to 53%.
Why the wider range for Q2 specifically?
Tariffs. That's the main reason they cited. Just uncertainty around potential tariffs and their impact in the short term. I would definitely need to circle back to that.
Absolutely. Tariffs seem like a big question mark. But before we get there, why the expectation that the second half margin might be a bit lower than the first half?
Couple of things there. First, they expect to recognize more revenue from the new high-NA EUV systems later in the year.
The next generation stuff.
Exactly. And right now, those are margin dilutive, meaning the initial costs are high relative to the price, so they pull the average margin down slightly as they start shipping.
Until they scale up production and mature the tech, presumably.
Precisely. Second, they expect a bit less revenue from upgrades to existing systems in the second half compared to the first.
Okay.
And third, again, the potential impact of tariffs later in the year is factored into that slightly lower second half margin outlook.
Got it. High NA ramp, fewer upgrades, and tariffs. Makes sense. They also gave some numbers for costs, right? R&D and SG&A.
Yep. For Q2, they're looking at about $1.2 billion for R&D and around $300 million for SG&A, and they expect the full-year effective tax rate to be around 17%.
Okay. And importantly, looking further out, they're still saying 2026 should be a growth year.
They are. They seem quite positive about the medium term.
What's driving that underlying confidence? What are the big market trends they're seeing?
No surprise here. AI, artificial intelligence. They
Yeah.
called it out as the primary driver. Still seeing very strong demand because of it,
It's the story everywhere in tech right now, isn't it?
pretty much.
Yeah.
And ASML sees this AI demand as solidifying, not just a blip, but something more fundamental for the future.
And they mentioned the broader industry picture, too, the $1 trillion target.
Yeah, they reiterated that projection. The whole semiconductor industry heading towards, or maybe past, $1 trillion in revenue by 2030.
Huge market potential.
Massive. But on the flip side, they did flag increasing uncertainty in the macro environment, worries about GDP growth.
Linked back to those tariff discussions again.
Exactly. The indirect impact.
Yeah.
If tariffs slow down the global economy, that could eventually dampen overall market demand, even for needed chips.
Right, a bit of a cloud on the horizon there. Okay, let's switch gears to the technology itself. Low NA EUV first, then high NA. The current stuff, the 3800 model, seems to be getting good traction.
Very much so. They expect it to become the main low NA tool pretty soon. And it's enabling more single exposure EUV.
Can you quickly remind us what single exposure means and why it's a benefit? Lithography is like the printing process, right?
Yeah, think of it like using a very, very complex stencil to pattern the silicon wafer. To get the tiny features needed today, sometimes you need multiple steps, multiple stencils for one layer that's multi-patterning.
Okay.
Single exposure EUV, especially with a more powerful tool like the 3800, lets chip makers pattern a layer in just one go.
Which is better because...
It simplifies the whole process. Fewer steps mean faster production cycles. You get chips made quicker. Often leads to better yields, meaning fewer faulty chips. And it can cut down manufacturing costs.
Got it. Simpler, faster, cheaper, potentially more reliable.
That's the goal. And the 3800 is apparently 30% more productive than the older 3600. That boost is what's helping customers switch to single exposure more often.
So, real efficiency gains there. Now, what about the next big thing? High NA EUV? Sounds like progress is being made.
Significant progress, it seems.
Got it.
They mentioned the SPI conference earlier in the year was kind of a coming out party. Customers were sharing positive results.
Like who? Any specifics?
Intel, for one. They talked about exposing over 30,000 wafers on their early high-NA tool in just one quarter.
Wow.
And maybe more impressively, they reported a huge process simplification on one critical chip layer, reducing the number of steps from like 40 down to less than 10.
40 down to under 10, that's dramatic.
It really is. And Samsung also chimed in, reporting a 60% cycle time reduction for one of their use cases with high-NA.
So, real, tangible benefits being demonstrated by the big players.
Seems so. And ASML confirmed they've now shipped all 5 of the initial EXE 5000 high-NA systems. 3 customers have them installed or are installing them now.
And the next version is coming soon.
Yep, the EXE 5200. That starts shipping this quarter, Q2 2025. So high-NA is definitely moving from the lab towards the fab.
Okay, so it's progressing. What's the timeline look like for, widespread use? When will this be the standard for the most advanced chips?
ASML laid out a kind of 3-phase plan. Phase 1 is now, with the EXE 5000 basically testing, learning, kicking the tires.
Right.
Phase 2 starts with the 5200 shipping now. That's focused on ramping up productivity, getting the technology more mature, more reliable.
And phase 3, high volume.
That's the expectation for phase 3, full utilization and high volume manufacturing. They're currently thinking that's probably around the 2027-2028 timeframe.
Okay, so still a few years away from being the main workhorse, but a clear path.
Yeah, phase rollout. They seem to be prioritizing getting it right, ensuring reliability, which makes sense for something this critical and complex.
And it was interesting they said the adoption speed isn't just about the cost of these incredibly expensive machines.
Right. Tool maturity is key. Reliability. Predictability. That's what fabs need above all else. An immature tool, even if advanced, can end up costing more if it causes yield problems or downtime.
So reliability trumps pure capability, at least initially.
Seems to be the case. And that reinforces their view that single exposure is generally better when the tool maturity allows for it.
Okay, let's tackle the elephant in the room then. Tariffs. You mentioned the uncertainty is affecting the Q2 margin guidance.
It is. It's clearly a major point of focus and, frankly, ambiguity right now. ASML was quite clear about the level of uncertainty.
What are the potential impacts they're worried about?
Well, there are direct hits they're considering. Tariffs on new systems they ship into the U.S. Tariffs on parts they need to import into the U.S. for servicing machines already there.
Okay.
Also, tariffs on components they import into the U.S. for their own U.S.-based manufacturing. And even potentially tariffs imposed by other countries on stuff shipped from the U.S.
Yeah.
Simplex.
Wow, yeah, that covers a lot of ground, hitting imports, exports, service parts.
And that's just the direct stuff. Then there's the indirect effect we touched on, the potential impact on global GDP and overall market demand if things really slow down.
Which is much harder to predict.
Much harder. ASML did say they're working with the whole ecosystem, customers and suppliers, to try and minimize the impact.
And their stance is they shouldn't have to absorb most of the cost.
That's their stated intent, yes. But how that actually plays out, who pays for potential tariffs along the value chain, that's still very much up in the air. Hence the wider Q2 margin guidance.
It sounds like a wait-and-see situation. Did they give any update on whether semiconductor goods are actually included in the proposed U.S. tariffs?
They noted that while semiconductors were initially part of the discussion, a significant chunk of semiconductor-related products have recently become exempt.
Oh, okay. That sounds positive.
It is, but they quickly added the caveat that the U.S. administration is still reviewing the entire ecosystem. So the uncertainty hasn't completely gone away.
Right. So some relief, but not total clarity yet. Okay. Let's shift focus again, this time to China. Seems like that market is becoming even more important for them.
It does look that way. They actually revised their forecast upwards. Now expect China to be a little over 25% of their total sales in 2025.
That's up from the low 20s they were saying before.
Exactly.
What's driving that increased demand, especially given the restrictions on selling the most advanced EUV tools there?
It's strong demand for their DUV systems, deep ultraviolet, the generation before EUV, but still critical for a huge range of chips.
The more mainstream stuff.
Right, and that demand is coming from both chips used within China and chips that China exports. So it's pretty broad-based demand for that DUV technology.
And is that reflected in their order backlog too? Is China about 25% of the backlog?
They said it is, roughly. Around 20-25% of the current backlog is for China. So
Yeah.
it suggests this isn't just a short-term spike in shipments. The underlying orders are there too.
Okay. Now, we hear a lot about China trying to develop its own lithography tools, especially EUV, to become self-sufficient. What's ASML's take on that? Do they see a credible threat emerging soon?
Their public stance hasn't really changed much. They acknowledge there will be ongoing announcements, research news, as they put it, coming out of China. But they don't see that translating into a viable industrial-scale EUV competitor in the near to medium term. They keep emphasizing the, immense complexity, the decades of R&D, the intricate supply chain needed. It's just incredibly hard to replicate.
Yeah, the barriers to entry seem astronomical. What about the restrictions on servicing certain fabs in China? Has that hurt their installed base management revenue there?
They didn't break out the specific financial impact on IBM revenue in China. But the fact that the overall China revenue forecast for 2025 increased suggests that any hit from service restrictions on specific tools is being more than offset by the strong DUV system sales and the services associated with those machines.
So strong DUV demand is compensating for any lost service revenue on restricted tools.
That seems to be the implication, yes.
And technically, even without the latest DUV or any EUV, Chinese manufacturers can still make fairly advanced chips using older DUV and multi-patterning, right?
Correct. ASML confirmed that using their older DUV tools, like the 1950i and below, combined with multi-patterning techniques, allows production of 28-nanometer chips.
Which is how everyone else did it back in the day at that node.
Exactly. It's more complex, maybe lower yielding than using newer tools, but it's technically feasible and was the standard method historically.
Provides important context. Okay, before we wrap up, any other key points or miscellaneous things from the materials worth mentioning?
Yeah, a couple of things. They plan to declare a total dividend for 2024 of 6.40 per share. Good news for shareholders.
Okay. Returning cash.
And interestingly, while ASML's own outlook is strong, they did acknowledge the picture across the wider semiconductor industry is a bit mixed right now. While like TSMC and the memory guys, they're seeing strong growth. But maybe Intel and Samsung have more muted outlooks currently. So not everyone is firing on all cylinders at the same time.
Nuances within the overall strong demand picture.
Right. And finally, the Morningstar reports really hammered home ASML's massive technological lead over competitors like Nikon and Canon, huge R&D spend, high barriers to entry, and they stressed how critical the high uptime of ASML machines is. Fabs just can't afford for these things to be down.
That reliability factor again. Crucial. Okay, so let's try and summarize this deep dive then. It feels like ASML had a strong start to 2025.
Definitely. Robust performance, beating expectations, especially on margin.
Driven significantly by AI demand, which they see continuing.
Yep, AI is a big engine right now.
They're making good progress on the tech front. The current low-NA EUV is improving efficiency, and the next-gen high-NA is moving steadily towards high-volume manufacturing in a few years.
Clear progress on both fronts, following a methodical plan for high NA.
But there are uncertainties. The macro environment, and particularly these potential tariffs, are casting a bit of a shadow.
Yeah, tariffs are the big unknown. They're monitoring it closely, working with partners, but the final impact is still unclear.
And the China market remains really important, growing its share of sales based on strong DUV demand, even with the advanced tech restrictions in place.
China's contribution is definitely significant and looks set to remain so, primarily through DV for now.
Overall, though, they seem optimistic about hitting their 2025 targets and seeing growth again in 2026.
That was the underlying message, yes. Confidence in the medium term remains high.
Okay, so here's something to think about as we finish. We've talked a lot about AI and tariffs right now, but looking longer term, we see this huge global push for more diversified chip manufacturing, right? Governments everywhere wanting their own fabs, supply chain resilience.
Yeah, absolutely. A major trend.
So how might that global diversification effort impact ASML's strategy down the line? They're dominant now, selling to relatively few cutting-edge players. What happens when potentially more, maybe slightly less advanced, fabs spring up all over the world? Does that change their market, their focus, their strategy beyond just AI and tariffs?
That's a really interesting question. Does it create more demand overall? Does it fragment their customer base? Does it pull focus from the absolute cutting edge? It's clear ASML is in a powerful spot, but yeah, the interplay of tech, economics, geopolitics,
Well,
that landscape is constantly shifting. Definitely something to keep an eye on.
indeed. Something for our listeners to mull over. Okay, that brings us to the end of this deep dive on ASML. Thanks for walking us through it all.
My pleasure. Lots to unpack there.
We'll catch you next time on the deep dive.